haven't changed our methodology. Why tinker with what works? Our predictions were and are based entirely on anecdotal evidence, what we're seeing at Wachtell Lipton, and are meant mostly to set the stage for discussion and debate today. If I could have the 7 predictions. If I go to the slide, that would be great. Oops, pressed the wrong button. There we go. The first prediction last year was that the public REIT industry would grow by $100 billion, exceeding $600 billion equity market capitalization. And of course, you'll all be aware of today's headline, $1 trillion in assets. So we give ourselves on this metric a score of yes, the equity market capitalization of REITs is currently over $600 billion, and yes again, prediction for 2014, a gain of $100 billion in equity market capitalization. Our second prediction last year was an increased use of leverage. The aversion to debt would fade as the pendulum swings back from the financial crisis. The verdict on this one is no, but yes again. Animal spirits are irrepressible. Foolish hubris may be irrepressible, whatever you hear from Newport Beach. So we predict that leverage will finally work its way back into the system and perhaps even reach, before too long, foolish levels once again. Our third prediction last year was that the fast-paced migration of non-traded REITs into the publicly traded markets would be a trend. And on this one we score yes and predict yes again. Last year there were 7 non-listed REITs that were listed, returning $16 billion to the public markets, the true public markets. And as all of you know, the pace of fundraising in the non-listed sector has been brisk, and so we predict that there'll be a continued migration of these vehicles into the public sector again during 2014. Slowdown in the pace of REIT conversions, again, yes, and again, even less, we think, in 2014. There were, in 2012, 10 C Corps that tried to become REITs. In 2013, only 5. So we suspect there will continue to be a brisk activity in spin-offs, REIT to REIT, as you see now at Simon and Vornado and other REITs, separating their properties into different categories, different kinds of properties. These are different from REIT conversions, C Corp becoming REIT. C Corp becoming REITs we think will be a bit rare and continue to be so. Last year we boldly predicted increased REIT M&A activity. Modest results on that, and so our prediction for 2014 is that the pent-up demand we saw last year will lead to an increase this year. And I think, although we haven't seen any mega deals announced so far in the first quarter of 2014, those of us in the markets are seeing a lot of talk, a lot of chatter, a lot of plans, and the remainder of 2014 augurs to be an interesting year in REIT M&A. This one was a bust completely. Pendulum swinging against activism. Both in the REIT sector and more broadly, we are deeply concerned with some of the motivations and some of the short-term thinking behind activism, and 2013 was the year that saw us on the wrong side of history. Whether or not the pendulum will swing back, all I can say is hope springs eternal. Finally, on a sort of a narrow gauge basis, last year we talked about trouble for single-family REITs, and it was an undistinguished year for REIT equity returns generally, an undistinguished year for equity returns in the single-family REIT